James from the Wall Street Minute, standing right in front of the New York Stock Exchange. And yesterday was a big day for the Federal Reserve. The Federal Reserve raised interest rates once again 1/4 of a basis point in probably one of the most overpredicted moves I've ever seen. There was a sort of a catch-22 going on where there was concern that if the Fed sort of took the foot off the brake pedal on inflation by not raising rates, it would look like they were caving and buckling to the demands of the financial sector. On the other hand, if they were to raise too aggressively, it might push more banks and more financial institutions over the cliff. Anyway, I think the Fed played it right. So far, Jerome Powell has played this whole thing, I think, masterfully, despite all the criticism, in an effort to what I would call normalize interest rates. In other words, we got to get up around the 5% level, period. That's the norm for over the last 100 years. Zero interest rates is simply not normal and not sustainable. Anyway, the Fed will probably have to raise rates a lot higher, and let's face it, there's a lot of people in Washington who are old enough to know this is the case, and they definitely know better. Secretary of Treasury Yellen kind of spooked the market a little bit by saying that she wasn't really supporting the idea of further expansion in the FDIC deposit insurance, which I think is a good idea. There's no reason to continue to encourage what has been known for hundreds of years as the moral hazard. Anyway, this is James once again from the Wall Street Minute, right in front of the New York Stock Exchange. Say hello, leave comments, and of course, subscribe to these videos.